What's up, everyone? How are you doing? Today we will talk about manipulations and we will backtest manipulations on few pairs. So it is really important to talk about manipulations since there are many different types of manipulations and they happen on a daily basis. These manipulations happen in order to stop out the majority of the traders and then move the market with nice volumes. This happens because not all the traders can make money and the market needs to take liquidity in order to move. So kind of view it as fuel in order to move. Usually we take liquidity in one direction in order to move strong, to have strong moves in the opposite direction. There are different types of liquidity. Of course, there is trendline liquidity. So wait a minute. There is trendline liquidity. There is double tops, double bottoms. There is Asian liquidity. There are many types of liquidity, and there is also internal and external liquidity that we talk about many times in the course. This is always taken almost 100% of the times. So always keep in mind the different types of liquidity. We will quickly cover all of them. So first, we start from trendline liquidity. When we have two or more touches of a trend line, this becomes a trend line and it is viewed by us as liquidity. When liquidity is created, we can break the trend line. A lot of people will start going short if they still trade like how many people were trading in 2018 when I was trading. They tried to enter buys here at the third or fourth touch of the trend line. The trend line is manipulated and we still continue to the upside, creating a new high. So usually we grab liquidity in order to grab the fuel in order to move in the opposite direction. We grab the fuel here, we go back, we check for confirmation, and we go against the masses basically. So if the majority of the traders, and we always need to try to think the opposite way. So if the majority of the traders are thinking to enter buys, because they have been programmed, they have studied that they must enter buys right here. They will enter buys, they will get stopped out. After that, they will try to go short because the trend line was broken and they see that the trend line was broken, therefore a new downtrend was created. They try to go short. Right after that, we continue long and we create a new high. So if you start thinking about the opposite way of how the majority of the traders are doing, you will end up successful. This is an easy example with trendline liquidity, but there are many other examples also with smart money, because also smart money traders are manipulated. Supply and demand areas are manipulated. Certain confirmations, the change of Carter, whatever you want to call it, is manipulated. So, for example, right here, majority of the people is going on buys right here, either here or right here. Then right here, they want to enter shorts after we broke the trend line. We have a bullish confirmation. We break the previous supply, we have a bullish confirmation, and we enter longs from the extreme demand. Personally, I wouldn't take this type of confirmation because it is a V confirmation. It is not, I usually stick to my edge that I have in trading, which says to not trade this type of confirmations. But of course, this is still a confirmation, not my favorite. I wouldn't trade it, but anyway, a good confirmation, and continue to the upside and create a new high. Let's continue. I didn't prepare any chart, so we're going randomly back in the market. Let's back test. What did we do last time on risk entries? We back tested JR30, so I believe this time we can go with Euro USD. Euro USD manipulations. All right. We can go back to the beginning of to half of November. We'll not be able to go on the 1 minute as there is no data on TradingView, but that's okay. So we go back. We do it from here. And as you know, so first, let's go back. We were talking about the different types of liquidity. As I said, there is trendline liquidity. There are some smart money liquidities that are also created, like supply and demand areas that are really obvious and that most of the traders are looking for. There are change of characters that are manipulated and are not real change of characters. They are what I define as fake change of character. A lot of people don't talk about this, and you see just Instagram gurus, just Instagram or YouTube or whatever, just talking about, oh yeah, you look at the change of character on the 1 minute, you enter sells, you're profitable. You look at the change of character in the 1 minute, you go for buys, you're profitable. This is not how it works. This is not how you can trade profitably. Of course, the change of character is something that I use as well, but that's not how you look for it. Another type of liquidity is double tops or double bottoms. This is, I believe, a lot of people already talked about this, so we don't really need to cover it, but when there are double tops, double bottoms, these are all types of liquidity. There is liquidity here, there is liquidity here. So when you want to trade this, you always wait for the manipulation and then you try to enter, and vice versa. You always wait for this liquidity to be taken. You will see that a few times, and it happens, you will see that a few times this doesn't happen. We don't manipulate the area, we don't manipulate this area, and the price just comes back and drops, or right here. One sec. All right, never mind. Anyway, comes back and goes. This happens in order to make some people lose in the long term, because if every single time we will manipulate this liquidity, or we will manipulate this liquidity and then go bullish, all of the traders would align with that view. But this happens in order to still have some people think that this works, or that head and shoulders work, or that trend line works. You will see also sometimes that we have a perfect trend line, and the third touch, instead of manipulating it, we continue bullish. Because if every single time we manipulate and then we continue bullish, all the people would align with this view. But it's really important that we must keep in mind that just because something happens a few times doesn't mean that it has a statistical edge. We must focus on what it is actually working, on what has a statistical edge, on what works most of the times, possibly above 50% of the times with a good risk-reward ratio. So this is the only way to be profitable, and you need to focus on this. Just because sometimes it works that the trend line continues, or just because sometimes there is a double top, and maybe for sometimes that you're looking at charts, it doesn't get manipulated and we just continue to the downside, doesn't mean that it is a good setup. Let's start backtesting. Okay, you might wonder what this indicator is if you haven't watched any of my videos yet, and this is the Asian range indicator, because this is another type of liquidity. I usually don't trade any of my pairs, which are these pairs right here. Let me show you. USD, GBP/USD, Euro GBP, Gold, US30, NZD CAD, and JER. Because on all of these pairs, I apply the concept of the Asian range. There are other pairs where I cannot apply it, but on the pairs that I trade, I can apply it. So Asian range liquidity, where we have liquidity both above and below the Asian range. So just to show you some examples before starting to backtest, we might notice that on most of the bullish days, I'm not saying on all of them, but on most of the bullish days, we will manipulate to the downside in order to continue to the upside, and vice versa. On most of the bearish days, we will manipulate to the upside in order to continue to the downside. So we manipulate the Asian range to the upside in order to continue and have a bearish day. Vice versa, when we have a bullish day, we have the Asian range. If it is a bullish day, we will manipulate the Asian range to the downside in order to have a bullish day. So before actually going into the backtest, I just want to show you some examples of what I was talking about. We are on 15 minutes. Actually, without going with this, we can just go with the charts. Okay, here we have bullish day, Asian range, manipulation, bullish day. Here, this is not really something that I would have traded, but anyway, here we have a bearish day, manipulation to the upside. We have a whole bearish day until this point. After this point, I'm not even trading because I'm not trading New York. Going back, manipulation to the downside, push to the upside. If we catch this confirmation, we have the whole move to the upside above the Asian range. Manipulation to the downside of the Asian range, move to the upside. Here, we just manipulate and continue. So there is another variation where we just have a continuation day, but this will be talked about in another day. Today, we are looking at manipulations in order to go the other way. Sometimes we have a continuation day where it is not really a manipulation. We just have a bearish day, we break and continue, retest the supply area, and continue. All right, let's get into the actual backtest. So on today's backtest, we will backtest manipulations and confirmations. It's pretty similar to last time where we were looking at risk entries, but this time we will combine it with some more things. It is still not the whole strategy, but we can still take a look at it. So we already go to the next day. I will backtest only the London session. The Asian range starts. We go on lower time frames to take a look at what is happening. Make sure to start from higher time frames, at least the 15 minutes in order to take a look at the market. We manipulate and break. After manipulation and break to the upside, if we consider this a good confirmation, and I personally do consider this a good confirmation, then we can look at a trade. Now, as a definition, the whole area that we want to trade from is the last move to the downside before the break to the upside. So if we just take the 3 minutes candle, it is this candle. If we take a bigger area, it is this whole area that manipulates to the downside and breaks to the upside. So usually, sometimes, I mean, I mark out both areas. I have the bigger area, I have the lower area, and I will take a look at how the market behaves. Unfortunately, we cannot go on the 1 minute because we're still at the half of November and there is no trading view data that provides that the 1 minute. And here we just continue to the downside. So we need to save this and take a look. Unfortunately, what changes a lot is that we don't have access to the 1 minute because I look at confirmations in the 1 minute, and I would like to see what happens here in the 1 minute. Maybe we will take a confirmation on a bullish candle with good volumes, and then it really depends on how we manage the trade. Once we come back, maybe we are already break even. Anyway, here we break to the downside. We start marking out other areas and looking for confirmations. We either have some bullish confirmations or we have a daily continuation to the downside. We don't have access to the 1 minute is really what. Perfect. We just continue to the upside. Day is over. It's 12. Here, I will say, Stefano, you also trade these type of confirmations. The 1 minute plays a huge role, and we don't really. Maybe we should go to December and look at the 1 minute so we have more data. What do you think?
I think so.
Because we cannot say we cannot backtest the whole strategy if we just stay on the 3 minutes the whole time. So we either backtest areas or we go to a period of time where we have access to our confirmations, I would say. What do you think?